Travis, most people watching this video have invested in or are investing in public stocks and bond markets. Public markets have been a great builder of wealth for people over the years, but opportunity in public markets are shrinking dramatically over the past 30 years. In 1996, there were over 8,000 companies listed on the U.S. exchanges. The number now, closer to about 4,000. That's half.
I had a feeling I knew what you were going to say there.
That's half.
You know,
it's a message. It's a message.
Yeah, I mean, the story gets more interesting. You know, in the U.S., 87% of firms with revenue greater than 100 million are private firms. And that trend's likely to continue because regulations for public companies have become more cumbersome, and obtaining traditional financing from the banking sector has become more difficult. So while public market opportunities are shrinking, like you said, almost cut in half, right? We must consider, looking at private markets for the investment opportunities or ways to access those markets.
Yeah, Travis, and traditionally investing in private markets, it's been in the form of either a hedge fund or limited partnership. And don't get me wrong, these vehicles are still valid to enter the private markets and they continue to be used by institutions and high net worth individuals and families to access the private credit and alternatives. However, the paperwork involved and tax reporting can be burdensome and just a pain in the butt. So it's important to also point out that private funds generally come at a higher cost, though, internally inside of those that... But if you stick with it, you're good.
It's generally more expensive to access the private markets, and it can be understandable for people wanting to avoid the cumbersome tax and paperwork, because we always say the best portfolio for you is the one you're going to stick with over time. However, there are a variety of opportunities that have been in the market now for a while, or have been coming to market, that can help you avoid that traditional LP structure and avoid that paperwork. Interval funds have become popular. They've been around for a while, but they're becoming popular here. And these are funds you generally can buy any day, but you can only sell them every quarter. So 4 times a year you can get liquidity from these funds. Again, these funds generally have a higher expense because you're accessing private markets with them. And the reduced liquidity you see inside these funds is due to the fund holding underlying private, less liquid assets, maybe a building over here or a private company that's not on a market, right? So for some, this is an easier way to invest in private markets or just be introduced to the concept of private markets. And it could make sense for many people depending on their specific situation.
Yeah, people just need to make sure they talk to their advisors so they understand the trade-offs between liquidity and expenses when it comes to these types of investments, because it's important to understand.
Yeah, and understanding those elements goes a long way, or understanding that those elements are going to help determine if it's right for you, and it'll go a long way in helping you stick with those type of investments over the long term, understanding liquidity and expense.
So true, Travis. This has been great. I look forward to it next week.
Look forward to it as well.